Plug Power investors have heard the word profitability before. But this time something feels different. Because Plug Power isn't just saying it wants to become profitable someday, the company has actually put a timeline on it. Positive EBITDA by Q4 2026, positive operating income by the end of 2027, and full profitability by the end of 2028. Sounds exciting, but here's the problem. Plug Power has made big promises before. So the real question isn't whether hydrogen has a massive future. The real question is, can Plug Power actually turn that opportunity into profits? And if it does, how high could Plug stock go? Let's break it down. Plug's recent numbers give investors a reason to pay attention. In Q2 2026, the company reported around $178 million in revenue and an adjusted loss of about 7 cents per share. Earlier in the year, Plug also reported strong revenue growth and improving gross margins. That matters because the turnaround doesn't happen with one huge contract. It happens when revenue grows while losses shrink. And that's exactly what investors need to watch. Plug has hydrogen production facilities, electrolyzer operations, fuel cell technology, and a huge global sales pipeline. The company has talked about a sales funnel worth more than $8 billion. But here's the first twist. An $8 billion sales pipeline doesn't mean $8 billion in profits. It doesn't even mean $8 billion in revenue. Plug has to convert those opportunities into actual orders, deliveries, cash flow, and eventually earnings. And that's where 2026 becomes extremely important. Management is targeting positive EBITDAs in Q4 2026. Notice something important. They're talking about the fourth quarter, not necessarily the entire year. So if Plug reaches that target, I wouldn't immediately call the company profitable. Instead, I'd call it proof that the turnaround may finally be working. And that could completely change how investors value the stock. Right now, Plug is still viewed by many investors as a company that needs to prove it can control costs and reduce cash burn. But imagine the market starts believing that Plug can consistently generate positive operating results. That's a different story. And this is where the next part gets really interesting. Because 2027 could be the year that determines whether this turnaround is actually real. Now let's move into 2027. This could be the real test. Plug is targeting positive operating income by the end of 2027. If the company achieves that while continuing to grow revenue, investors could start looking at Plug less like a struggling hydrogen startup and more like an emerging clean energy business. But there's one issue I wouldn't ignore: cash. Profitability isn't only about revenue. Plug needs enough liquidity to reach those targets without constantly raising additional capital. Because if revenue grows but cash burn stays massive, shareholders could still face dilution. That's one of the biggest risks in the entire story. Now let's talk about my Plug price prediction. Plug is currently trading around the low 2 range. My first target would be around $3. If Plug continues improving margins and delivers better than expected results, I think $3 to $4 is a realistic recovery zone. Then we have the stronger bull case. If Plug hits positive EBITDA in late 2026 and gets closer to positive operating income, during 2027, I could see Plug moving toward $5 to $7. And here's where things get really interesting. If Plug actually reaches full profitability by the end of 2028, keeps growing revenue, and avoids excessive dilution, I think an $8 to $10 scenario becomes possible. But I wouldn't treat $10 as a guarantee. There's also a bearish scenario. If Plug misses its profitability targets, margins stop improving, or cash burn remains too high, the stock could stay stuck around the $1 to $3 range, and it could go even lower. That's why my personal view is cautiously bullish. I like the potential turnaround, but I don't think investors should buy Plug simply because hydrogen is a huge industry. I want to see 3 things: revenue growth, margin improvement, and lower cash burn. If all 3 improve together, that's when I'd become much more bullish. Because here's the real question. Can Plug Power survive long enough and execute well enough to benefit from the coming hydrogen market? That's the billion-dollar question. And 2026 could give us the first serious answer. So now I want to hear from you. Where do you think Plug is going? 3, 5, 10, or do you think Plug Power will struggle to become profitable? Drop your price target in the comments. And if you want more stock breakdowns covering both the upside and the risks, hit subscribe, because the biggest move in Plug might not happen when everybody is talking about it. It might happen when the numbers quietly start changing.